thank you all for your attention today. We live in an attention economy, and we really appreciate your time today to learn about these very interesting alternative investment asset classes that we feel very strongly you should have allocations to in your portfolio for various reasons, which we're going to get into today. But before I do that, I want my fireside chat people, my panelists, to introduce themselves, introduce their companies very very briefly, and share with us a little bit about their investment strategies and why they think these investment strategies are good for our current environment. So with that, Atul, can you just give us a very brief introduction of yourself and your investment strategy?
Sure. Thank you, Michael, and thank you, Jeremy. Thanks to everybody who's tuning in as well. My name's Atul Tiwari. Yes, I have a background in asset management, having had senior level positions at Vanguard in Canada and BMO Bank of Montreal here as well, and then moved into the fine wine asset management space with Cult Wines. So Cult Wines is a company that started in the UK in 2007 and is the leader globally in fine wine investing. We have about $325 million worth of fine wine under management, and as I've mentioned, a 15-year track record. So without it getting in, I'm sure this will come out later, all the investment merits of fine wine. We do approach it in a very methodical way with an investment committee, a global committee of which I am a member. We meet quarterly. We set benchmark allocations. And Michael, to your question of how do we approach the investing, just like you would any other portfolio, diversification is important. So we drill down into the sub-regions of fine wines to make sure that the benchmark allocation, which gets driven down through the portfolio managers, is the experience that our clients get. The clients on board, and we do our suitability and our KYC. We understand the client's objectives, time horizon, and then we match the client to a portfolio of fine wine that we then actively manage. So in these times, there's plenty of wonderful investment merits that come along with fine wine: low volatility, low correlation to equities and bonds, low downside capture. So what that means is when the markets go down, your wine portfolio doesn't go down nearly as much. And so when you look at 2008, S&P 500 was down about 34-35%. And the fine wine index that's generally accepted in the industry is the LiveX 1000. It was down less than 1%. So you really get a great cushion there. And then, of course, there's the opportunity for excellent returns, which in the long term average 10 to 12% annualized. And I think our title is a true hedge against inflation. And of course, as a store of value, and also the dynamics of the fine wine market really do insulate it from inflation, whether it's rampantly high or low, as we've seen over the years. You see that it's disassociated really from inflationary impacts because it's driven by supply and demand mechanics.
All right, thank you very much. Alan, can you give us a brief background about yourself and Masterworks and your strategy and why you feel your strategy is relevant in the current environment that we're in?
Sure. Thanks again for having me, and thanks for everyone for joining. My name is Alan Sokolitsky. I'm the Chief Investment Officer at Masterworks. Masterworks is an art investment firm. We have two sides to our business. One side is catered to self-directed investors, That's the side of the business that we started with back in 2017 when we were founded. On that side of the business, we've raised almost $500 million in capital across roughly 120 paintings. And so what investors are able to do when they come to the masterworks.io website is they're able to invest in shares in multi-million-dollar works of art. We typically focus on artwork that's priced at least $1 million and up. As a firm, we are extraordinarily quantitatively oriented, which, as you might imagine, is quite rare in the art market to be extraordinarily quantitatively oriented in terms of how you make your investment decisions. But the data was abundantly clear through decades of research that we were looking at. It turns out that for paintings that are at least selling for $1 million and up, that's where you tend to see a lot more stability in terms of the performance expectations that you might have. When you're looking at $1 million and less, I like to call it sort of along the lines of the venture capital of investing in the art market. You know, maybe you invest in 10 paintings, 9 of them might turn out to be worth nothing, 1 of them would do well. That's not necessarily the part of the art market that we wanted to grow our business around. So that's on the retail side of the business. We recently actually crossed 400,000 registered users on our platform. And then the other side of our business, we recently launched a Diversified Art Portfolio. It's a private placement product, and that's specifically catered to financial intermediaries and institutional investors. So we have several distribution arms, but the overarching premise is still the same, that we are making art an investable asset class. Why do we think it's attractive? Well, I'll share with you a little bit of my own background that might help inform my own personal thoughts on it. Prior to Masterworks, I spent many years at Goldman Sachs as a market strategist. And before that, I spent several years at Citigroup. So my entire career has basically been all around the investment management world, what I now call the traditional investment management world, since now I'm involved with art. So the only way that I know how to refer to everything else except art is to call it traditional investment management. So I was building portfolios, researching every asset class under the sun. And I can tell you that what caught my eye and what really made the light bulb go off in my head about what Masterworks was doing is that for all of those years that I had spent during my career researching every other asset class, it never occurred to me, and I never came across the idea about art as an investable asset class in the first place. And second, I had no idea that there was even data available on the art market to make researching it possible. So what I've since found out, of course, art, we're talking about a $1.7 trillion asset class. Now, just to put that size in context, private debt is smaller than the art market. Private real assets, smaller than the art market. Many investors already at least think about investing in private debt and private real assets. Whether or not they do is a separate question, but they at least think about it. The art market is bigger, and it's also half the size of the US private equity industry. Well, how many firms are doing private debt, private real assets? They probably number in the hundreds. How many firms are in private equity in the US? More than 9,000. How many firms are investing in the $1.7 trillion art market? 1. And talking to that person right now. So we think it's an enormous opportunity. The segment of the art market that we focus on, it's contemporary art. That segment has been appreciating at 14% annualized for decades now. And what I always find fascinating when I talk about it is it's one of those things that the vast majority of investors, not surprisingly, are just not familiar with, because the vast majority of investors, like myself up until recently, never really thought about art investing in the first place. So it's had impressive performance. It's been doing it for several decades. And I'm saving the best part for last here. The most attractive and unique correlation profile I've ever seen in my career. So I mentioned before that in my prior life, I was building portfolios, asset allocation modeling, among other things. And so what I basically did is I took all the data that we have for the art market. We've constructed art market indices. And so I started measuring correlations against 15 to 20 different major asset classes that probably cover the majority of asset classes that any investor would ever own. And I could not believe the results. The results were simply this. The correlation of art to those 15 to 20 different major asset classes is close to zero across the board. And it's that last part that makes it so unique, the across the board element. The reason why it's so unique, I'll just give you a similar, another example. An asset class like private equity, let's say, everyone knows it's going to have a low correlation to bonds, but it's going to have a pretty high correlation to stocks. The point is, when you find an asset class that has low correlation, that's only going to be the case relative to some asset classes, not all asset classes. When it comes to art, you have close to zero across the board, which means no matter what's in your portfolio now, if you put art in the portfolio, it is not going to act like anything else you have there.
All right. So for those of you that don't know me, my name is Michael Corselli. I'm the founder and chairman of FLIA. I went into private banking, covering family offices, high net worth individuals, and some small, pension funds. For working for UBS, and in South Florida, out of the Miami office, and I started a little bit before Art Basel Miami was founded. Right, so I got involved immediately over 20 years ago, and have been involved in Art Basel since inception. And I've watched the local Miami art scene really like develop and blossom, and I've been a part of it. I'm an art collector. I love art, and I've been involved with it, for over 20 years. And for those of you that have been to our office, you'll know we have a lot of artwork here. So I love Masterworks. Prior to even going to college, my parents owned a liquor store which did a lot of wines. They brought in a sommelier who graduated from University of Pennsylvania, and that was what his degree was in, and he was very passionate about it. And he shared with me a book that was Windows on the World. And so that was the first book that I started to read on wine. So I'm both an art and wine aficionado, and involved in Art Basel. In 2006, I invited Carly Schweitzer, the head of UBS Art Banking, to do a sunset cruise presentation on art as an asset class, right? So at the same time, I was worried about a coming collapse in the US dollar, which never fully materialized, but it just always seems like it's right there knocking at our door. So with that said, I'm going to ask each of you from a storage of value perspective, and you got to keep these answers really brief because I want to cover a lot of space today. From a storage of value, how does wine perform with the collapse in the US dollar?
I'm happy to maybe take that one briefly. Interestingly, the fine wine market is really driven out of London. Historically, England has been the market where most of the fine wine ends up and is traded. There is what I call a stock exchange, although it's actually a wine exchange called Livex, of which there's over 500 professional members who trade wine all day, every day, making independent prices, which is what we use when we price our client portfolios. That's centered in London. It started in the year 2000. So most of what we do is actually priced in pound sterling. So we are obviously clients who onboard with us around the world. We have clients in over 80 countries. Will usually onboard, but we'll have some British pound exposure. So all that said, if the worry is that many countries stop using the US dollar as reserve currency because of what we're seeing happening right now, it's really hard to predict what that will do. It may actually be good for US investors, possibly, in that it just depends on how other currencies react. If the US dollar goes down, and the euro and the pound sterling don't, then buying power is less. So we'll just have to kind of watch that and see how it goes.
Okay, Alan.
So what I would say for Art, I'll take the question in a slightly different way. Not necessarily, the way I'll take it is related to your question, but not directly. So I would focus a little bit more on inflationary dynamics than necessarily the dollar going down. And as I said, those two things are clearly intertwined. But specifically on inflation, this is another one of those things that the vast majority of investors don't know because they've never really considered investing in art before. So if you go back to the 1970s when inflation was elevated in the US, and you ask somebody, what's the asset class that you would think about owning when there's an elevated inflation environment, chances are most people would tell you to own gold because that's what everyone's pretty much familiar with for inflation. Now, it's not a bad idea to own gold during an inflationary environment. If you go back again to the 70s, the average calendar year performance for gold during that period of time when inflation was elevated, gold's average performance was about 31%. So clearly, yes, it can act as a pretty good hedge against inflation. But we're here to talk about art, for me personally, of course, and I can't help but point out that, believe it or not, during that same period of time, what was the average calendar year appreciation for the art market? It was actually 33%. But this is one of those things that the vast majority of investors don't know, right? You sort of take it for granted that any kind of financial data for any time period you want, where do you go? Well, if you have a Bloomberg terminal, you go there. Maybe you go to Yahoo Finance, Google Finance. There's data everywhere for that. Where do you go for art market data? Well, that's not exactly readily available. We've kind of aggregated all of that art market data in-house. We don't have to kind of address this as part of the question you asked, but we have this gigantic database of all the art market transactions that have taken place going back roughly 67 years. That's what allows us to do this analytical work and share information like what I'm sharing that most investors are just not yet familiar with.
Look, I think the U.S. economy, I think the global economy is on the precipice of recession. That's based on instinct and then looking for some of the data. So I want you guys to tell me, if I have $1 million to invest, why should I invest it with you right now? And how do you think it's going to perform if we are on the precipice of a recession?
I'll take that one. So one of the benefits of the art market that I've discovered doing all of the research on it that I have is, so previously I talked about how art is uncorrelated to pretty much any major asset class. Another point that makes it so attractive is that it's also pretty much uncorrelated to any major economic variable. And those two components, like I said during the introductory comments, make it one of the most unique asset classes I've ever researched in my career. So to answer your question directly, how would it perform during a recession? I would argue, I don't think it really matters whether or not there's going to be a recession in terms of how it's going to impact the art market. I happened, just before this call, actually, I wanted to look up data both for private equity, because just as a side note, our asset class and our diversified art portfolio are often compared to private equity in some sense. And so what I did is I wanted to see, okay, how did private equity as an asset class do? Going back to, I think I went back to the year 2000, in any calendar year that we've had a recession since, and how did the art market do? So the art market was a positive 6% on average going back that far, and private equity was up about 5% on average going back that far. So I guess that's somewhat below the long-term performance of the art market. But if you were to do some more statistical analysis and figure out, okay, but is art still actually correlated to economic growth? The answer is it doesn't really seem to be.
Yeah, I would.
Okay.
I would echo that from the fine wine standpoint. Again, extremely low correlations over the long term, about 0.08 to the S&P 500. Also, what drives the fine wine market is it's simple. It's supply and demand. We would estimate each year, each new vintage around the world, you probably get about $7 to $8 billion worth of investment grade wine coming on the market every year. And then when you look at the demand part of the equation, I mean, it's a consumable good. So over time, every vintage that's coming out is becoming less and less in supply. And then when you factor in the fact that demand has been increasing every year as more countries become, wine drinking cultures that hadn't been there before, more wealth is created globally. The demand for that limited supply is growing. So it's a fairly it's an axiom that's played itself out over the years. We've looked at, like Alan, we've gone back and looked at the LiveX 1000 and how it's performed over each of the years. And it's quite interesting because you go back to 2004 or 5, and you look at the annualized performance. The biggest drawdown year was -4%, and that was 2011, which had nothing to do with the economics, but more to do with the fact that China outlawed the gifting, excuse me, of lavish gifts to Communist Party officials, which brought down the pricing of Bordeaux, obviously. So it really had nothing else to do but with that. And the biggest upside year for the LiveX 1000 in that same time frame was 30%. So we would argue that it probably, you won't see a dramatic impact on returns in a recession. And again, you could just look at the impact of the first few months to a year of COVID. Last year, the wine market had a tremendous year with 21% positive return. So we think it's fairly insular.
So guys, switching gears quickly, how do people get a hold of you guys if they want to chat with you and have like one-on-one conversations with you, or if they want to stay up to date with your latest thinking? What's the best way for them to do so? What's your favorite form of communication?
Well, so for us, masterworks.io is the primary website to go to. That's again for the self-directed side of our business. Whenever anyone signs up on our website, they are automatically going to go through a suitability process with a member of our membership team. So we always have to make sure that investing in art is suitable for every investor, depending on what their particular goals might be, their time horizon, so on and so forth. So they go through that process. That starts at the website, masterworks.io. And then for the sort of institutional side of our business, that's a separate company name. It's called MWC Group, and the website for that is mwcgroup.com. The website and the content is fairly similar, but again, that's more for institutional investors and financial intermediaries that would be interested in our diversified art portfolio.
Right. And for us, it would be cultwines.com. And we have, similar to Alan, a retail offer in the sense of you can onboard at a minimum of $10,000, and that would be a digital onboard. And we'll take you through the KYC and suitability that way. And your account would be rebalanced with our algorithm to keep you within the asset allocation that fits your objectives. If you onboard at the $35,000 level, you get a dedicated portfolio manager. So on the site, there's an ability to set up a consultation, and in that consultation, we'll do something similar to what Alan talked about, where the portfolio manager will run through the same KYC and suitability, and then match your objectives with the wine portfolio. So that's probably the best way to reach out to us.
Do you guys use like YouTube or do you use LinkedIn? Can people hit you up to see some of your latest color and commentary? Because look, there's a lot of investment nerds on this call right now that like to understand storage of value. And I personally think that you both have very, very unique storages of value, right? Which is the reason I'm asking these, like, sort of off the wall questions of you.
Yeah, well, you can definitely reach us on LinkedIn for sure. On the MWC group page on LinkedIn, we've actually posted several research reports so we've partnered with Citigroup, publishing on the art market, and we've done that every year for several years now. So you can find a number of research reports there specifically about art as an investable asset class. At the same time, we've started to put out some of our own research. If you sort of reach out to us, you can reach out on LinkedIn, you can reach out on the website, we can put you on a distribution list, things like that. So we definitely have content that we're putting out. You'll also probably be able to find a lot of videos on the Masterworks page on LinkedIn as well, and on the website. So we are definitely in the business of content creation too.
Yeah, and we do too. We publish regular research reports that I would say are as good as any published by any broker dealer. We will go deep into any particular region or vintage year, talk about our views, how our investment committee would rate certain wines. We have a process internally that is very data driven with a human fundamental overlay, where we'll rate wines on what we call the QPR, the quality price ratio, so that we would only enter positions where wine meets our QPR. But it also, just taking the dry investment part out of it, you'll see some education on our website just around some of the great producers and their histories, as well as ability to engage more with your portfolio. I mean, let's face it, wine is a fun thing to talk about. It's ethereal. There's a lot of pleasure in wine. So the great thing is you're able to marry the head part of investments and returns together with the heart part of enjoying the wine as well.
So my wife just texted me. She wants to put some money with both of you guys. So I guess we must be doing a good job.
Fantastic.
Great to hear.
Thank you.
All right. So switching gears, let's go to democratization of alternative investments. So these asset classes have been typically reserved for the extremely wealthy, right? The very well connected. It's been reserved to a very snooty group of people who I would say are ultra high net worth individuals, not just accredited investors. What I find intriguing about both of your companies, is you're democratizing this asset class and you're bringing it to the average, ordinary, everyday investor, as long as they're doing it responsibly. So let's pretend for a minute that you don't have 20 plus years of experience in these asset classes, right? Why are you interested in wine? Why are you interested in art from a non-investment perspective?
From a non-investment perspective, or
yeah, absolutely.
Well, I mean, I can definitely speak to what the accessibility part of the first part of your question, which is you're definitely correct in saying that access to fine wine as an investment is something that the privileged few could do for many years until an offer like ours came along to make it more accessible. I mean, it's very hard to do this DIY. I mean, you've got to source the wine, make sure the provenance, transport, store in perfect conditions. And then when it comes time to exit your position, you have to have ways to provide liquidity that don't incur extremely high commissions, which will eat into your returns. Right?
Oh, so, you're going into the investment side. I want to talk about the social aspect.
Sure.
And socially, what type of high you get from being involved in the wine scene?
Yeah, that one's obvious, but sure, I'll talk about it. I said at the outset, the great thing about what I'm doing is that I get to marry my passions of asset management and fine wine. So I'm a member of what's called the Confrérie des Chevaliers du Testament, which is a Burgundy wine group. And I managed our cellar for about 5 years, learning some of the ins and outs of buying and obviously enjoying fine Burgundy. So I have a real passion for fine wine. I think it brings you to some very interesting experiences. You meet some great people along the way. There's great travel involved. And when you get right down to it, the producer of wine is a farmer. I mean, they're creating something from grapes. So often when you meet producers, they're humble people. They make some great wines, but at the end of the day, they put on the boots and get out there in the soil and the muck. So there's a lot to it. The other thing I'll just add quickly is my wife was the head of the fine wine department for Ritchie's auction house. So she's quite into fine wine and has a formidable palate. So we enjoy wine together. Our kids are too young to drink wine yet, but we definitely let them nose it and we talk about it with them. And our younger son is into dinosaurs. So invariably when we say, "What do you smell?" he'll go, "Dinosaur bones." So that's
I love that. I've known you for a bit and I didn't know that. I didn't know any of that story. Alan, what about yourself?
Well, so I mean, art, it's ultimately a social endeavor, right? It can be commentary on social dynamics that are taking place. It can be depictions of a moment in time that maybe represent what the particular artist was feeling. It's hard to argue that if humans have been, going to museums and appreciating art for centuries, that there isn't something sort of inherently beautiful about it. I mean, you couldn't argue that. I mean, the evidence is clear. And so along those lines, we've spent the entire time up until now talking about the investment merits of these various asset classes. But because we do see other merits outside of the investment merits for art, what we've actually done as of about a month and a half ago, we opened a beautiful gallery in our office in New York City where we're going to be rotating all the different paintings that we hold. And like I said, I think now it's roughly 120 paintings. Not all 120 are going to be in the gallery at one time, but we're going to be rotating them. And so investors will be able to come and look at those. And, I always like to add this point, and I always try to say it in the most delicate way possible. There is actually some irony. A lot of individuals who appreciate art, they'll go to museums, but as it turns out, not everyone realizes that museums only showcase a very, very small percentage of the actual art that they hold, and the vast majority of it actually stays in storage. So the irony I was mentioning a moment ago is in the sense that sometimes we get asked, you're taking an asset class that was historically kind of appreciated for its own merits, and you're making an investment. And so what we're actually saying is, well, on the contrary, we built a gallery specifically because we want to showcase all of our art significantly more than, frankly, many museums do. So we do appreciate both sides of the coin. We think it's an attractive investment. We also think it absolutely should be appreciated for sort of its social merits as well.
If I could just add as well, the way we're currently structured and offering, you actually own the wine. So it's segregated. It's clearly marked and identified as yours. So as a client, you can choose to take possession of the wine if you don't want to on-sell it. So historically, 80% of our wine is sold for investment proceeds. 20% clients say, "Hey, rather than sell that case of 2000 Lafite that's been sitting in perfect storage for the last 20 years, I think I'm gonna take that in and we'll enjoy it." So that's one of the other great things about the portfolio.
So there's a lot of comments coming in. So let's start with Masterworks. What's the minimum investment required at Masterworks, both for the fund as well as the I guess crowd-funded piece? So how you guys separate the minimums for each of those products?
Sure. So on the self-directed side of the business, I would say that the average investment is about $15,000. That's also, I believe, the stated minimum in the offering documents. There is some flexibility around that. Again, this goes back to the suitability process. We have no intention or desire to have someone over allocate to it simply because the minimums in the offering document might be 15,000. Everything ultimately has to be suitable for the particular investor. So that's on the self-directed side. And for the institutional side, it's the Diversified Art Portfolio. That's a Reg D vehicle similar to private equity. I say that because many investors are familiar with private equity, so it's similar along those lines. The minimum for that is $100,000, and it's for accredited investors.
Okay, and what's the lockup period?
So let me provide some detail around that, because in that sense, it is actually a little bit different from private equity. So the actual life of the Diversified Art Portfolio is 10 years, similar to private equity. But what is actually quite different from private equity is that we call and deploy the capital upfront at the outset. So it's not along the lines of capital calls the way it is with, let's say, private equity funds. And the reason, by the way, that we're able to do that is because, I mean, we didn't go into sort of the mechanics of how we even fractionalize the art in the first place, but just to kind of go through it quickly, we buy a painting with balance sheet capital, we create an LLC, we file it with the SEC, we put one asset, the painting that we just bought, into that LLC, and then we take the LLC public via a Reg A offering. So when you're buying shares in that LLC, which only has one thing in it, the painting, you're effectively buying shares in the painting. And so because that process typically takes a few months, what we do is we pre-purchase a lot of the paintings up front. And so all of this is a way to say that with our Diversified Art Portfolio, we've already bought at least all of the paintings that we plan to purchase for this year already through, call it the month of June, and we'll be buying them as time goes on through the end of the year. So all of those investments have pretty much been getting made already, which means as soon as the funding comes into the fund, that capital gets deployed up front, in contrast to private equity. The other piece that's a little different is that we return capital and profits starting in years 3, 4, all the way through year 10. So investors will actually receive back the bulk of their capital and profits between years, call it 3 to 7, and there's not going to be much art left in the portfolio towards the end. And that also makes it quite a bit different from private equity.
Got you. Okay. Atul, how about yourself, Atul?
Yeah, as I mentioned, our minimum is $10,000, and also we want to ensure that nobody's over leveraging their portfolios into wine. We think 10,000 is a good minimum because, as I mentioned, from the investment standpoint, like anything else, it's important to be diversified. So to build a good diversified portfolio as a core, we think that's a good starting point. We probably, the median account is somewhere in the neighborhood of 150,000 or so. And so that would be about the median. And we don't have any lockups. But what we do say to our clients is that you should come into each position thinking of it as a 3 to 5 year hold. 5 years is ideal because you want to give the wine the chance to appreciate. As I mentioned, it's consumption driven, the pricing. So if the longer you wait, the more there is consumption, and pricing is fairly predictable. It will go up. For that reason as well, most of the wine that we hold is within the last 5 to 15 years of vintages because there's risk reward to holding too long. And we don't go out to purchase old wine that could be something from 1947, for example, because the risk reward just isn't there for us to go find that wine, ensure its provenance, and also have the opportunity to appreciate in price to the degree that we would want it to. So it's important you come in with that frame of mind, but at the same time, if a client wanted to exit their positions in a year, we can do that. There's no lockup.
All right, somebody just making a comment, they invest in both of you. Somebody making a comment that somebody's like trolling us saying, drink profits, not a good strategy for wine or restaurants. Cult wines, do you invest in other alcohol than wine, such as champagne or cognac?
Yeah, we would consider champagne wine for sure. And we do invest in it. It's an exciting market because there's the traditional, the marquis, the marks that everyone would hear of and know, Veuve Clicquot, Salon, all of these storied producers. But there's a contingent of growers that are kind of going back to making wine and champagne that's terroir driven. So they're bottling their own grapes and creating this wonderful natural wine, and the prices there have been appreciating tremendously. So we part of our job is to identify those up and comers and invest in those as well. In fact, last year champagne was the #1 sub-index for wine at a 41% return. So returns have been quite good over the last few years. A lot of it COVID, climate change, and supply chain driven. As far as other alcohol goes, we don't. We're experts in fine wine. We haven't gotten into Scotch or cognac or sake, but there is a market for that. So maybe someday we'll expand.
Okay. Masterworks, what's the tax rate on capital gains on exit and art?
So the taxes are, it's taxed as collectibles because it's art, which I believe is 28%.
28%. Okay. And how about cult wines? What's the tax rate on wine for capital gains in the US on exit?
So I don't remember if I told you I'm a former lawyer, but I am. Obviously I have to say we can't give tax advice. We don't have a professional accreditation to do so. But so we do tell our clients obviously to deal with their individual tax advisors and accountants. But I can say just generally speaking, it would be a similar tax approach as to what Alan said. It's considered generally a collectible, but you would have to consult your own tax advisor.
Okay. Chris is asking sorry if you addressed this, but as it relates to fine art, how liquid is it on a day-to-day basis? Not from an investor point of view, but in general, is there an active bid ask in the market?
So it's in general not a liquid asset class along the lines of equities. But in another regard, you can consider it. So here's how I would put it. It's liquid, but not in the immediate time frame that you might want. So let me give you a perfect example that'll probably hit the point home. You can imagine that for a Picasso, you will probably not have difficulty finding plenty of individuals around the world who would want to buy your Picasso. But is it possible for that transaction to happen right this second, the way that you could transact with an equity? No. But yes, there is liquidity for all of the multi-million-dollar art that we own. It just might not be at the exact moment that you want it. Now, I will also add, we have a secondary market that's part of our platform as well. Now, the secondary market, just to be clear, it's not the type of market like an exchange where we as Masterworks are matching buy and sell orders. We can't do that. But it's more of a bulletin board where individuals who currently own shares in particular paintings can put those shares on the secondary market if they would like. And another individual who would be interested in buying those shares would have to go to the bulletin board and see that those shares are available, and they can engage with in that transaction with each other. But we are not actually matching buy and sell orders. But that secondary market does exist for investors who are interested in liquidity.
So, Alan, do you have any plans to take any of these paintings public, like these Reg A offerings? Do you guys have any?
Well, technically, they are effectively public vehicles. They're not public vehicles in the sense that they're traded on an exchange the way that stocks are traded on exchange, but they are public vehicles in the sense that the moment we bring one of those paintings onto our platform, and by the way, we're launching, call it 1 to 2 new paintings per week. Once those paintings go on the platform, they are available for anyone to invest in. And it's just a matter of investors getting to the platform, quite honestly, soon enough to make those investments. And the reason why I say that is because it's sort of been interesting for us. I mentioned at the beginning that we have more than 400,000 registered users on our platform. But another interesting data point about our business's growth is that when we started years ago, we had to measure the amount of time it took for our paintings to be fully allocated on the order of quarters. And all of a sudden, maybe a year went by and our paintings were being allocated in a matter of months. Then sometime after that, it was a matter of weeks. And I can tell you that over the last 6 months, we've actually had several paintings that sold out in a matter of hours. So assuming that an investor gets to the website when we launch new paintings, they should be able to invest.
All right. I'm going to do something a little different right now. I'm going to ask some of my friends, because I got a lot of friends that are on this thing today, and they're not actually asking questions, but I'm knowing them for as long as I've known them. I know that these guys have some thoughts. So I'm going to actually call on them. Ambrose, I see that you're on. I know you have something to say, and I want to encourage you to ask a question right now. And I'm going to allow you to talk, which we don't really do. Ambrose, you there?
Yes, hi, Michael. Good to see you. And my question is on the Masterworks. I missed some of the earlier part. I'm actually in London right now, so I got the wrong time zone. Is there any sort of preference that you have as far as geography of origin of the art?
No, well, we don't have a preference for geography. We focus on contemporary art. So where that contemporary, so I'll give you an example. Kusama is an Asian artist. We're a big fan of by Kusama. That's just one example. It's really a way of saying, no, we don't have a preference about geography. As long as it falls into the contemporary art segment. I will say that there are some few and far between exceptions to that contemporary art rule. The reason for that, I mentioned this earlier, we've built what I like to call Bloomberg for the art market. We have an extraordinary database of data on all transactions that have taken place in the art market going back 60, 70 years. And so there are some exceptions to our preference for contemporary art in terms of artists or particular works that we think will have very attractive performance over time, despite the fact that they might not actually be a part of the contemporary art segment. And also, I'm glad to hear that you're from London. It reminds me, I love mentioning this. As it turns out, we have investors who actually come from more than 100 countries around the world. And of course, every state in the US, but the fact that we are so widely distributed across the world is great, is something great to hear.
Ambrose, thank you so much for the question. Alex, you're up next. Please unmute yourself. I know you have a question to ask. Alex.
Muted.
I know you're there. Maybe he can't unmute himself. So let's try somebody else. Hold on. Dan, are you there? Dan Hughes. I think some of these guys are shy. Let's keep going down the list here. They also may not know how to unmute themselves. Ed, Are you there? Do you have a question that you'd like to ask? All right.
We also have another, this is Jeremy. We also have another question. Do you guys invest in modern art, Warhol, Pollock, Lichtenstein, etc. while you're finding people, Mike?
We have invested in Warhol. As a general rule of thumb, we don't like to specifically reference the particular artist. So I didn't go into this before. Basically, our universe of artists that we follow is roughly 7,000. And from that universe of 7,000, there are 75 artist markets that we actually are actively purchasing in. So I don't necessarily like to go through the particular ones that are part of that. I usually do it on a reverse inquiry basis. So I will say that yes, we have owned Warhols before.
Lane Lowry, are you there?
Yes, I was just curious how early in a career for artists you might start picking their work up, taking some risk on some of the improvement.
Sure. So in general, the artists that we focus on have paintings that sell for at least $1 million. I can't remember if I mentioned this at the beginning. The reason we focus on the artists that sell for $1 million and up is because with all of the data analytics that we did, I mean, we have a whole team of data scientists that work here. What we basically found is that when you're talking about artists whose paintings sell for over $1 million, the level of consistency or stability in terms of those paintings' performance over time is superior, in our view, to what we see for paintings that sell for under $1 million. Now, your question was about emerging artists, and I'm here talking about paintings for over and under $1 million. The connection is actually that typically for emerging artists, their paintings are selling for less than $1 million. That's why I was talking about that cutoff. Is it possible that down the line we might explore getting into that market? Yes, maybe at some point down the line, but I would reiterate that under $1 million, that market strikes us as being very similar to the venture capital of art investing, where most of the paintings you might buy from an emerging artist, they might not turn out to be that valuable. Maybe you get lucky with one or two. That's not the area that we wanted to start building our business around, but will we get there one day? Who knows, maybe. At the moment, I'll just repeat one of the first things I said, which was, we're talking about a $1.7 trillion asset class. We're the only ones doing this. Let's focus on the sort of over $1 million price point paintings, the established artists, the ones that everyone's more familiar with. Let's build our business in that area. Once we do that for a good amount of time, then we'll start maybe considering other areas of the art market.
Bill Jacoby, what do you have for questions, Bill? Let's see. Bill, you gotta unmute yourself. There you are. You're unmuted. Now you can talk. He may be having a microphone issue. No mic. He's got no mic on his desk. Type your question into the chat so that we can get it, because I know you got it. And as you're typing it, I'm going to go back to Alex. Alex, hi, how are you?
Okay, can you hear me now?
Yes, we can. I knew you had a good question in there. How are things in Florida?
That's a good question. I was going to ask you that. I'm actually in London right now as well. So, you know, maybe I should meet Ambrose for a drink later. But no, my question, it sounds like, you know, with art and perhaps wine as well, that there may be subclasses in terms of asset classes. Like Alan was just talking about the sub-million, over $1 million being, you know, the comparison I make is blue chips versus venture capital. Does therefore that comparison also go into, you know, would you expect a portfolio of sub-$1 million paintings to return, albeit more risky, but return higher amounts over time? You're mentioning you have 60 years of pricing history. Is that something you can analyze at that small granular level?
Yeah, so I mean, that's actually a fantastic question, and we've been kicking the ball around about publishing on that exact topic. I can tell you that our initial research, which sort of runs contrary to what I surely would have expected, and I say that based on spending many years in the traditional investment management world and knowing that usually when you compare risk and returns, there's some sort of relationship you expect to see over time. Something that's riskier hopefully has better returns over time. What's fascinating is that does not always seem to be the case in the art market. And so it's sort of it runs contrary to what you might assume, where bigger artists with established kind of pedigrees and names and brands that you would recognize and the paintings that they produce, despite the fact that they might be on the pricier side, despite the fact that they might be more along the lines of blue chip art as opposed to emerging art, you oftentimes will see lower volatility with those particular artists and paintings, and also seemingly more attractive appreciation over time. I imagine, and this is just at the moment, it's based purely on a hunch, but it's the best hunch I have. The reason might be, and it kind of goes back to the fact that we built that database with 60 to 70 years. You can imagine that that type of relationship or dynamic is less likely to be the case in a market that is totally efficient, right? When a market is completely efficient, there's pricing information everywhere. Everybody knows the same data points. They're all running the same calculations. Those types of relationships probably would not happen very frequently. But when you're an institution like Masterworks that basically started from scratch building this entire database, and all of this information is not exactly available for consumption to the entire investor community around the world yet, you're more likely to see a lot of strange inefficiencies in the market. And so anyway, that's the best hunch that I have at the moment, but in general, it sort of does seem to run, contrary to what you might expect, at least for the rest of the investment world.
All right, so
Sorry, I was just going to answer that one for wine as well. Yeah, I think that's a great way to look at it. We would consider certain regions with emerging producers like Chile, and there's some great producers with great price appreciation potential. We'd consider that as an emerging market portion of a client's portfolio. And also, we do have data scientists who run models. We've got a number of factors that go in, and as you can appreciate, some of them are historical price appreciation. We've got a lot of data points, brand, the producer's track record. And so there still is a bit of bias towards some of the producers that have been around for a long time with proven results from a price appreciation, as well as, making great wine perspective.
So this last one's for Occult Wines. Hang on one second. It was just, I got a picture of it here. What is, all right, so let's do a two-part. What is your favorite wine? Where is the asset mix right now based on the investment committee recommendation? And what is the size of the total fine wine market?
Okay. Yeah, so my favorite wine, as I mentioned, I'm a serious Burgundy fan. So my favorite wines come from Burgundy. There's some terrific producers there that many of you would know about. There's the obvious ones, Domaine Romani, Conti, obviously, but Loire. There's a number of just great producers, Roumier, Laflave. I could go on, but it would be Burgundy for sure. In terms of the rest of the question was around
The size of the fine wine
Size of-
market.
yeah.
How big is it?
okay.
What's the blend for like the portfolio recommendation
Great.
from the investor?
Yeah, so the size itself, we, as I mentioned, assume that it's about 7 to 10 billion new investment grade wine coming on, and from there, the secondary market's probably about 8 billion or so as well. So it's a reasonable size, and if you think about it, it's very opaque, it's very fragmented. with us being at $325 million in fine wine assets right now, we're the biggest, and there are very few companies doing this, and certainly nobody, we think, doing it to the degree that we are with the investment rigor that we bring to it. And so that would be our estimate of sizing. We think there's about 20 billion in fine wine that's being stored at various places around the world.
All right, so gentlemen, we are out of time today. I want to invite you both to come and visit us during Art Basel. I would love to have an event and bring art and wine together with some like hard-hitting economic intelligence on geopolitical, interest rates, FX, all different types of asset classes. And I think it would be a great combination to have both of you back here in December during Art Basel. I appreciate your time. We are over our time. I appreciate everybody for listening. And I want to thank you both for being on today.
Thanks so much, Michael.
Thank
Thanks,
you.
everyone.
Yeah, thanks for participating, and thanks, Alan, for being part of the panel. A lot of fun. Thanks, Michael. Thanks, Jeremy.